Hello everyone, and welcome to the channel. Today's episode is all about the effect of inflation on real estate, especially on the buyers. The markets have been changing recently, and real estate has seen some interesting alterations. Stick around to the end of the video to know what inflation means for you, and which side you want to be on. Breaking down inflation. What does it mean? Inflation in a country's economy essentially happens when the general prices of products and services goes up, but at the same time, the purchasing power of people decreases. This means that you would have to pay a higher amount of money for the same item during inflation, an indication that the total value of your money has decreased. To put that into perspective, inflation means that if you had to pay $1 for a sandwich 2 years ago, you now have to pay $2 for the same sandwich during inflation. Another major cause of inflation in an economy is caused by a sudden increase in demand for certain products and services, increasing the willingness of consumers to pay more for the same products and services. What this does is reduce the value of the currency, causing inflation. The effect of inflation on real estate. Oftentimes, the thought of inflation almost always spells doom for consumers, largely because they have to part with huge chunks of money to purchase or acquire the same products that they would acquire a couple years before for much lower prices. When it comes to real estate, one of the biggest and most noticeable effects of inflation is a general increase in rental rates. During inflation, it can get pretty difficult to acquire a mortgage for a house, and this is mostly because an increase in mortgage rates translates to lower purchasing power of the consumers. For this reason, many of them prefer to rent homes as opposed to buying or mortgaging. When more and more people begin to rent their homes, the general rule of supply and demand comes into play. An increase in demand results in an increase in price, meaning that the general rental rates of homes will observe a significant rise. For this reason, landlords end up making more money on the same unit during inflation than they did without it. With a general increase in rental and mortgage prices, the aspect of homeownership becomes affected, so that anyone who desires to own a home and actively makes steps towards the same would have to spend a lot more money and possibly have to wait a much longer period than they would have in lower inflation or in the general absence of the same. What inflation means for landlords and real estate investors. From the previous section, it's pretty evident that inflation almost always plays to the advantage of landlords and real estate investors. So, what is it about their investments that makes them more money or gives them more value for the same piece of property? Before answering this question, it is important to note that these advantages are almost always observed when you make an investment on a piece of property before inflation kicks in. The onset of inflation changes the general rules of investment, and the prices also change, often drastically, so that making the same investment costs you a lot more than it would have before inflation. During inflation, housing is considered a profitable asset for two major reasons. The first is that the house is bound to rise along with the inflation rate, and the second is that a house is considered a leveraged asset. Here is a brief explanation to break it down a bit. Whenever you set out to buy a house, you have to pay a certain deposit for the unit, usually 20 to 30% of the total cost of the home. When inflation strikes, the general price of the home observes an increase, which is calculated by multiplying the overall cost of the home by the rate of inflation. It is important to know that the new value of the house is calculated by the overall cost of the unit and not the amount of money you paid as a down payment. What this essentially means is that if inflation increases the value of the house by 2 times its actual value, the overall value of the deposit you made on the same home goes up 4 times. In addition, home investors who may have taken a fixed-rate mortgage on a house find themselves at a bigger advantage because the payments automatically drop in inflation-adjusted dollars, so that you end up paying less for your loan than you would have. This explanation is mostly why inflation works to your advantage when you have made a prior investment before inflation strikes. It is unlikely that someone making the same investment in the heart of inflation would experience similar benefits as you. Other effects of inflation on real estate. Aside from the previously mentioned effects, there are several changes that may be observed directly and indirectly as a result of inflation. Increase in construction material price. As earlier mentioned, inflation will have you pay more for products that would initially have been cheaper. This essentially means that just about everything you're going to need for the construction of your home will be more expensive. Due to an increase in the general cost of living, even the cost of labor will go up, making the acquisition of your home a more expensive affair. Lower income for financial institutions. Because inflation essentially means that less people will be able to mortgage their homes, financial institutions end up earning less. While the reduced income may not spell doom for them, it definitely means that the total percentage of the income drawn from financing individuals and other institutions will see a significant drop, as and when less people steer away from mortgaging. reasons for the current inflation in America, and how it affects real estate. The general economies of many countries on the world have seen a steady decline in the cause of the last year to year and a half for obvious reasons. In a bid to mitigate the general effect of the same, and to make sure that her people maintain some semblance of financial balance, the American government has taken certain steps that, even though helpful, have affected real estate in a way or another. To begin with, the government has been printing trillions of dollars in an effort to revive the economy through grants given through the Small Business Administration, PPP loans, and the first stimulus package. With more money circulating, inflation has been on a steady rise, and more people are finding it hard to afford their mortgages and to purchase homes. This has essentially led more people into renting homes, increasing the demand for the same. This increased demand has seen the price of rentals increase pretty drastically, making the homes more expensive. Additionally, homeownership has become more an investor market than a government initiative, and this has caused a sharp change in the overall price of houses. The government had a way of capping off the price of homes so that they remained affordable. However, with more private investors joining the club, pricing becomes ungoverned, meaning that investors get to choose how much they prefer to charge for their units. The combination of these factors has made real estate rates change quite some, making homeownership a more difficult endeavor for many people, especially those who had not begun any mortgaging process before the onset of the current inflation. So, how can homeowners take advantage of inflation? As a homeowner or property investor, it is possible to take advantage of inflation so as to increase profits during such times. Below is a number of ways through which you can make an extra dollar through real estate. Investing in rental property. As earlier mentioned, more and more people tend to rush into renting property when inflation strikes. Additionally, the current state of affairs has seen to it that mortgaging has become an expensive affair. Rental properties, therefore, are bound to make you lots of money now and in the future. You can invest in commercial, multi-unit, residential, and family homes that are projected to present higher demand and therefore higher returns. Real Estate Investment Trusts (REIT). Real estate investment trusts will be able to distribute your investment across multiple properties that are bound to give you sound returns. They are able to achieve this by making analysis of current market demand and rates of appreciation, allowing them to see where the money is and the best properties in which to invest. Note investing. Seeing as banks are and will continue to offload quantities that are higher than normal, it is expected that investors will make more profits, largely because of lower prices and less competition. Other investments. You can invest in a couple other ways to maximize your profits in real estate. Some of them include mutual funds that focus on housing markets, joining real estate crowdfunding platforms, private equity funds whose focus lie on real estate. Real estate is, without a doubt, affected by the rate of inflation in a country. However, it is possible to rise above and actually make profit with a wise investment in the same. All you would need to do is know where to invest and to follow the market trends. Thanks a lot for joining us today, and we hope you have learned a thing or two about real estate and inflation. Be sure to like this video and subscribe to the channel. And don't forget to leave your questions or comments in the section below. Do let us know what you'd like us to cover next.